Hello, friends. Today we are taking a look at Apple, ticker symbol AAPL. This is one of the Magnificent Seven stocks. We'll be looking at the performance of the stock in the last months and years. Then we'll be jumping at some. I will explain a little bit of what Apple, just in case you don't know who Apple is. We'll talk a little bit about who Apple is, a couple of news, look at the latest earnings um, report of Apple. Then we'll jump at the um, 10 years fundamentals of the company and then try to figure out what a fair value to pay for Apple will be at this time. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Apple is one of those companies that I don't own, but I want to own. I feel that is close um, to the price that I would like to buy it. I think that Apple is one of those magnificent, great companies that have a great moat and are what Terry Smith will probably agree with me at calling it a quality investment. In the last 5 days, Apple is flat. In the last month, it is down 6.6%. In the last year, is up 24%, and in the last 5 years, an amazing 330%. Um, Analysts think that Apple is a buy right now, and they see a target price in the next 12 months of um, above $200, $203, which will make it at this price at 11% gain. They reported earning on February 1st, so we'll be taking a look on that. They do pay a small dividend of a little bit less than $1 at 96 cents, and then which will make it at this price at 0.5%. Honestly, I don't mind them paying this little of dividend as long as whenever we look at the numbers, what I want to know is can they better deploy their own money by our money, if we were to be owners, on reinvesting on themselves and growing that money. Right now, they're trading at 28.4 times EPS, which is really nice for one of these growing companies, and a 4 EPS of 26.7 times EPS. When it comes to Apple, who is Apple? Apple is it's an amazing company. They sell the Mac computers, laptops, and desktops. They also have the iPads. I have an iPad Pro. I love it. It's great. They have mini iPads, all the different iPads. They also have the Apple Pencil that you can do amazing things with the iPhone, with the iPad. They also have the iPhones, which is great. A lot of people love the Apple products, and that's what it makes them really nice. How do you call this? Moat, because people want to be part of that. They also have the Apple Watch, even though there was a lawsuit that it was against them that they lost, and it has created some problems with the Apple Watch. So I will encourage you to look a little bit more into the issues and what it's going to happen with them. Then you have the new Vision Pro. This is the alternative to Oculus from Meta. And I do have an Oculus from Meta. I don't have the money to buy one of these Apple Vision Pro. I've watched a lot of different videos about it, and they seem to be an amazing, revolutionary. It's not. My understanding is it's more of a reality um, a productivity thing instead of just entertainment like Meta. So I will be very interesting what you think about some of these products that have. Do you have one? Let me know down in the descriptions below. Are you planning to buy Apple? Apple Vision Pro? Are you a faithful member of the Apple family, just like I am? I just don't have the money to buy some of those things. I love my AirPods. I had this generation. I haven't bought the new generation, so I love it. Also, they have Apple TV. Not only they have the actual TV um, accessories, so that you can access the internet, all the different apps, but also they have their own Apple TV um, company in which they're producing. It's like a subscription. It's like a Netflix kind of, but really, um, really just. I feel bad even comparing with Netflix because they don't have that many things. Is there something that you like? I loved watching what was that called? The soccer player. The um I forgot the name of the, you know what I'm talking about. Um so they have a lot of, also in entertainment, they have um not only the Apple TV, but they have the Apple Music Store, the Apple Arcade, Apple Fitness, Apple News, Apple Podcasts. You may be listening to this video on Apple Podcasts, and so they have really got into becoming a company that has everything for your needs when it comes to um, um, entertainment and productivity. um, so they're really great company, I think. So, and that's why I'm actually surprised that Berkshire Hathaway just trimmed their Apple holdings. Um, and it could be that it's just that they're taking some profits and they're wanting to redeploy some of that. I haven't not looked into their latest report. I've been wanting to buy Apple. I use this Quarter app in which I can listen to the earnings report. I have not listened to the earnings report. It gives you all the information. I'm not paid by them. I'm not sponsored by them. I just think it's a great tool whenever you're having time. Instead of reading the earnings report, you can listen to them. So, talking about the earnings report, last time they reported on February 1st, and they beat by 8 cents. So they did really good. They also beat on revenue by $1.3 billion. They made $1.19 billion, $119 billion. They're expecting to report at the beginning of May. Um, um, the the what's it called? Analysts. The analysts are looking at a lower EPS than what they reported last quarter. But remember, this last quarter includes Black Friday, and Christmas and all that shopping. That's actually when I bought my my iPad Pro. So I'm part of that revenue there. And but the EPS revisions in the last 90 days, they have 21 up and 19 down. So there's a little bit of worries with Apple and how much some of the investment that they're doing. There's some people that are worried about Apple. I am not worried about Apple. So at least that's my own opinion. I will encourage you to give me your opinion. Just write down in the comments below. What do you think about Apple? Do you own it? If you do, what price did you enter? If you're thinking about adding more, what price are you looking to buy more at? Is there a reason why you don't want to own Apple? just let me down below and also subscribe so that whenever I have a new video, you will be informed about that. When it comes to revenue per shares, as you can see, this is the kind of companies that I'm looking at. Is some gradual, predictable growth, and I like that they keep going up. In the last 5 years, is an 12% growth. In the last 10 years, 12.7% growth. Once again, they're close together. I like that. Gross margins are average in the last 5 years are a little low of what I would like. I would like it to be way higher. At the average is 45%. I would love it for it to be at 60%. But the thing is, with Apple, they do have some pricing. They had some pricing margins, and that's a little bit where some people are worried that Apple are losing their ability to price, to just hike the prices of their products. Also, I know that there has been some issues with China and the Chinese government when it comes to Apple, so that will be something to look into. When it comes to earnings, earnings continue to grow. There was a huge growth on 2021. There was a lot of questions whether they could maintain it, and it seems like after 3 years, they're still maintaining those kind of earnings. As you can see, the last 5 years reflects that big growth of 16.6%. The average in the last 10 years is a growth of close to 15%. Profit margins at 25%. That is great. That is awesome. That is exactly what I'm looking for. Free cash flow also has been growing up. It dropped a little bit on 2023, but it's recuperating up again in the last 5 years. Once again, growing at 16.6%. Last 10 years, growing at almost 13%. Free cash flow margins at 26%. That is amazing. That is great. With a free cash flow yield average on the last 5 years of 3.83%. That is awesome, because if we were to assume that Apple's continues to grow, their free cash flow close to their 5-year mark, that means that in 5 years from now, if you buy it right now, that will mean that your free cash yield will be close to 8%, it will be amazing. Book value goes up and down. I don't understand why it goes up and down. It's remained flat. However, their return on equity is a crazy 144%. Return on assets are at 27%, which is also crazy. And return on invested capital at 50%. This is part of the reason why I don't mind if Apple decides to just keep the dividend and not raise it, because they are growing that money that they don't pay me. They're growing it even better than I could on my own. Honestly, at 50%, that's crazy. The growth of the dividend, talking about it, in the last 5 years is close to 5%. In the last 10 years, close to 7.7%. Payout ratio is very, very low at 15%. But once again, I don't mind. Most people like the payout ratio to be above 30 and below 50. I don't mind them keeping some of that cash and reinvested it in the company, because they can deploy it much better than that I honestly can. When it comes to long-term debt, they can pay it with the average free cash flow in a year and a couple of months. Outstanding shares, they have been buying very, very aggressively their shares back at 3.4% in the last 5 years, and at 4.4% in the last 10 years. Now, this is good. Most people may not like that they're buying their own shares, because they keep thinking, well, they're kind of high. They're kind of high. But if you look at it, they keep buying them, and they have been growing all of that they're buying honestly, I think, in at great prices, and it just keeps going up. So I think they're doing an excellent job. As you can see, their return on equity just continues to grow. The trailing 12 months is better than their 5-year average. When it goes to the gross profits, gross margins are 45% when their 5-year average is 42. Profit margin, I mean, that was gross margin, sorry. Profit margins at 26% when it's normally at 25 in the 5-year. Free cash flow margins continue to grow. This is a great company, and that's why I personally will love to buy it. However, just because I want to buy it, that doesn't mean that you need to buy it, because I am not your financial advisor. I'm just a YouTuber. I'm just giving you my opinion. This is for educational purposes. I would like to hear your opinions. So leave the comments below, but do not make any financial decisions based on my recommendations. Or, well, I don't know if recommendation, but my thoughts. Because you should be doing your own research and yada, yada, yada. You understand the whole drill. I don't want you to sue me. That's pretty much. Okay, when it comes to historical multiple valuations, honestly, I will be not even paying attention to the average. The reason is because this company continues to grow. So this company is not going back to the averages. I like to look at the averages with companies that are a little more cyclical, a little more hard to predict. These ones are growing so fast that I will just honestly be paying attention to the trailing 12 months. So based on the historical multiple valuation, a fair price is 170, which is pretty close to the prices right now. When it comes to the revenue-based valuation, a fair price will be somewhere close to $167. When it comes to the discounted discounted earnings valuation, we're again looking close to 170. Remember, I normally, all of my numbers include a 15% discount minimal require. Payback time, we're looking at $204 with a growth of 12%. Discounted free cash flow, we're looking at $195 of a fair value. When it comes to owners' earnings, it's at $155, which is a little low, but that's okay. When we put everything together, once again, if you want to look at it, the 5-year average is close to 150. The average between the 5-year average and the trailing 12 months is 163. I will completely ignore those. I'm looking at a fair value of $177, which is very close to what it is right now of 182. I honestly, I am actually thinking about buying it at this price. It's at 180. That's my own opinion. If I wanted to put a 15% this margin of safety, that will be 150. I don't think that this, I mean, could it get to 150? Yes. I just don't think that it's going to get there. If you want to put a 5% margin of safety, that's 170. I've been looking at 170 as an entry point. Honestly, what I'm probably thinking about doing is, this is something I have not discussed before. I'm probably going to put 50% of a position at this price is at 180, and if it continues to drop, anything that drops under that, I'll be buying until I complete my position. So those are my opinions. If you want to do your own calculations and you want to play around with growth rates and discount rates and margin of safeties, you can go to Buy Me a Coffee. The link is in the description, and you can get yourself my valuation sheet. Or so you can buy me a coffee. I love coffee, especially medium Kenya. That's one of my favorite roasted coffees. And yeah, I would love to hear from you also. Subscribe, leave a like, and let me know what you think. I would really love to hear your opinions when it comes to that. Until then, I'll see you in the next video.